Hedging, trading gilts, pound dollar, and US Treasuries. What else have we talked about? We've talked about guaranteed discount prices when we bought equities. What else have we talked about? We've talked about high beta hedging on our equity exposure, getting a high beta position against an equity dropping marketplace. These are the kind of conversations that don't happen anywhere else in the retail space to this degree. Certainly somebody might talk about bits and pieces of this, but they don't talk about all of it. They don't give you that everything. You get pieces, and because of that, you're having to build the jigsaw yourself without having a box lid to look at to figure out what the hell does this picture supposed to look like. So you only get pieces of a jigsaw from other people. What we hopefully give you is we give you the jigsaw box lid, and then we also give you the pieces in the box so that you can put together the jigsaw puzzle that's supposed to be the markets, oversimplify the markets, and you are doomed to failure. And I think this is where most retail trading falls apart. Everybody tries to simplify it. If you want to simplify against a $100 million Goldman Sachs algorithm, be my guest. Try and simplify your trading against these guys. You will soon get found out as a very uninformed trader, and you will end up paying a significant price for that lack of information. You need to do some work. And I think that work is what Jerry's mentioning. It's the PhD, if you like, the PhD equivalent, where you're actually becoming the person that starts to direct the traffic, or at least you know what is directing the traffic. And you can start to take advantage of that directionality from those traffic signals. And that's why people should stay in this room past the workshop. That's why we should have people who want to stick around, because whilst we're going to be talking about probability distributions predominantly over the course of the workshop, during the day we'll probably mention them on occasions. But it's part of that jigsaw. Overall, it's part of that jigsaw. It's a very important part, and it can be a standalone part for sure. We've even mentioned a while ago in conversation with some of the other guys in the room, very simply, that you could almost trade some of these trade setups on their own as standalone trades. But they can also help complement the other stuff massively. Looking for a high probability sell or a high probability buy actually now becomes a reality instead of just pure chance. We do have value, but now we can add value to probability. How much probability do we add? How much extra probability does this value price give us? That's when we start seeing why you should stay in this room past the workshop. But what we're going to leave you with in the workshop is a framework for finding some very high probability trade setups that you might want to make your own. Some might want to take the fading opportunities. Some might want to take the momentum opportunities. Either way, you can take one or the two or potentially the three setups that we're going to be focusing on. There's going to be the structural momentum trade. There's going to be the momentum trade. And there's going to be the fade opportunity. There's going to be three particular trades that we're going to be looking at in terms of market profiling using the dynamic process. What the start time for the workshop will be each day is 4 p.m. London each day.